this video, we are going to go over breakouts, and we're going to go over the two ways you want to trade a breakout. All right, so the first way is, a regular way where the market breaks out, okay, and basically it pulls back and it give you these stair-step patterns, okay? So it's going up, down, up, down, up, down. It's giving you higher highs. And the same thing if the market's going down, it's giving you lower lows, right? So we want the stair-step pattern because it's very predictable. We can look at our key levels, which is these swing highs right here or these swing lows, okay? And we can get in, around these swing highs and swing lows, okay? So that's why we want this stair-step pattern, okay? Now, when the market breaks out, okay, it's going to give you these supply and demand areas right here. So a lot of times you will see demand right here, okay? Demand right here when the market breaks out. So to me, when it comes to supply and demand, the way I trade it, I don't like to just trade supply and demand just because I see it. I like to combine my supply and demand. I like to trade it when the market is either breaking out or at support or resistance, or if the market is reversing. Now, when it comes to breakouts or any strategy, the best way to trade supply and demand, okay, is the first pullback and the second pullback. Because the first pullback and the second pullback, those are high quality trades. Those are the best trades you can take, period, okay? When you are late in the trend, that's when smart money plays around, okay? Either the market get really choppy, or they blow past these zones, or whatever the case is, and you're going to find yourself getting, stopped out a lot, and, we don't want that. Now, there are some times when I do, take the fourth or the fifth pullback, but that's rare, okay? 99% of the times I'm focusing on the first pullback and the second pullback. If I do take that fourth or the fifth pullback, it's because the market is trending very strong. And that usually happens maybe 3 times a month. So, if the market's trending really strong, it's above that 21 or 20 moving average, and it's trending for the whole day, maybe I try to get in at that fourth or fifth. But a lot of times I'm done for the day when that fourth or fifth pullback comes anyway. So a lot of times I'm not even trading around that fourth or fifth pullback. And another way I would get in at the fourth or fifth pullback, if the market does something like this, let's say the market goes like this, goes down, right, and basically it breaks out, okay, of this, maybe pulls back, I'll probably get in at that pullback, look for that continuation, okay? So that is the only time I'm looking for that fourth or fifth pullback trade. But 99% of the times is this right here. But I'm always trying to get in that first pullback. These are the high quality trades right here, guys. So what I like to do, I like to get in the first pullback if I can. If I can't get in the first pullback, I'll definitely get in that second pullback. But that first pullback is really what I want, because that trade right there, not only is a high quality trade, you can actually get in and get, a lot of reward, okay, to the upside, because you're getting in, first. So you have to understand that. Some of you guys are late in the trend. You wait for the market to develop and say, oh, okay, now I see the market is trending. Let me trade right here. And this is the fourth pullback or the fifth pullback, and you're late. You're late to the game. And you wonder why you're getting stopped out so much. Now, I'm not saying that the third pullback or the fourth pullback or the fifth pullback can't work. Yes, it could work. But those are low quality trades, okay? Because the trend is obvious now to most people. Now, smart money might play more games. And when it comes to the market, guys, a lot of times you will see the market break out and give you sometimes 3 flags or 3 pullbacks in reverse, okay? So keep that in mind. Not all the time, but sometimes you will see they will give you 3 pullbacks or 4 pullbacks, and then the market will reverse a little bit, right? So, guys, we want to master, okay, the first or the second. That's it. That's the core strategy, okay? The core strategy is always trying to master the first pullback and the second pullback, okay? And you really want to master that first pullback, because that's the best trade you can take, okay? Period. Hands down. So keep that in mind. So let's look at the second way you can actually trade a pullback. Okay, so the second way you can trade a pullback is when the market breaks out, okay? But it breaks out a little bit. It's not going to break out a lot, okay? And it's going to pull back, okay? So a lot of times when it pulls back, it's going to pull back either to a demand area or a support or resistance area, okay? Usually maybe right here or right here, okay? And you're going to get some type of bounce around here, and then the market probably going to do something like this and then continue to go up higher. Okay, so this is another way we are going to attack breakouts. Same thing if the market is going down. Okay, if the market is going down and it breaks out, okay, sometimes it breaks out a little bit and it pulls back to these supply areas or resistance areas, and it continues to go down. So that's the second way we are going to attack breakouts, right? So let me show you guys some examples on the chart. Okay, so as soon as you mark down your levels, you go to your smaller time frame, which is either the 4 minute, 5 minute, or the 15 minute. Okay, someone asked me, hey, when do I go to the smaller time frame? As soon as you mark down your levels, you mark down your horizontal levels, you mark down your breakouts, and then you go to your smaller time frame. You don't wait. Just go as soon as you mark down your levels, right? Now, this is a 1 hour breakout right here. It's giving you this nice stair step pattern, okay? And this is what we want, okay, when we are trading the markets. We want the market to break out, giving you higher highs, right? And basically go into those key areas so we can take a trade. You swing low right here, okay? Or either swing high. Notice it broke the swing high, but it went to the swing low right here. So these are the key areas, guys, we want to get in around here, all right, when the market is traded. So let me show you guys another example. Okay, so we have another breakout right here. The market's going back. Breakout. Now, a lot of times you will see, you know, a one candle, you know, pullback, and then the market breaks, and it will actually, you know, find resistance around that one candle right here. So the market went down, pulled back, went down, pulled back, went down, pulled back, giving you these stair step patterns, guys. All right, that's what we want. So let me show you guys an example of the second way we are going to trade breakouts. Okay, so here's the second way, guys. So we have a breakout right here. This is actually where the market opened right here. We have a breakout. It broke out just a little bit, and it slammed right back down, and it basically went to this support area right here, right? Went to this support area right here. A lot of times you will see the market, if it has a nice demand level, it will go to that demand level too. But anyway, it went to this support area right here. It bounced off that support area, actually created some type of demand right here too, okay? And went back up. So this is the second way we're going to play these breakouts. Because a lot of times you will see the market break out just a little bit, okay? And then the market basically goes back up, right? So let me show you guys another example. Okay, so we have here the market breaking out a little bit, and it comes right back to this resistance and to this resistance right here, and it goes back down. This is actually where the market opened right here, okay, which is 9:30, and then next thing you know, it goes back down. Okay, so this is how we're going to play these breakouts. Sometimes it will break out just a little bit and then comes back, find resistance around these areas right here, and then it will continue to go back down, right? So notice how it basically formed resistance right here at this swing low right here, and it went back down. So that's how we're going to play these breakouts, guys. It's very simple. We don't want to make this, you know, rocket science. So you're going to either play the regular way, or you're going to wait for it to break out a little bit, find resistance or support somewhere at the end of the breakout, okay? And then we're going to look for trades around here and basically look for that continuation, right? So a couple of things I want to talk about before we go to the next video. Let me show you guys real quick. Okay, so the first thing I want to talk about is a lot of times when you see breakouts in the morning time, the breakouts are usually going to some type of support or resistance. So you will see the market break out and then maybe go to a resistance area right here. This is a good example. It's going to a resistance area, and then it will find resistance at that area. Okay, so vice versa, if the market's going down, let's say we have a actually, let me draw this real quick. The market's going down and it breaks out, okay, to the downside, and we have, let's say we have support right here. A lot of times the market will just basically go to that support area, right? And then makes you know, sometimes it will bounce off that support area, give you a reversal, okay? So guys, keep that in mind when you're trading, okay? Sometimes the market will bounce off those support or resistance if you see the market trading towards those resistance areas or support areas, and you might get a snapback and, you know, nice reversal. Sometimes the reversal will go all the way back to that breakout, okay? And sometimes it won't, but sometimes it will go all the way back to the breakout, right? And the next thing I want to talk about is if I see a breakout, right, in the morning time, and we're down, let's say we're down here, okay? Let's say that we're looking at this right here, and let's say that the market opened around here. Me personally, this is just me, I'm not going to most likely trade this market, because I want to trade the breakout, right? Unless it's a support area right here and the market gives me a nice setup right at that support area, maybe I would take that, okay? But for the most part, I'm like, you know what? I'm going to skip this market. Let me see if I see another market breaking out or whatever the case is, okay? So that's what I like to do. Again, I will probably skip this market, or if I do see a nice reversal pattern, maybe an inverse head and shoulders or a nice pop, okay, show me a nice demand level, okay, and then pulls back to that demand level, maybe I'll take that trade and, you know, get that nice reversal. But, you know, if I see the market basically, you know, all the way down here, that means that the market is probably not going to give me, you know, high quality trades around here. It might chop around, or it might just do something that's going to stop me out. So a lot of times I just ignore those markets, and I'll probably look at another market, right? So I want you guys to keep that in mind. Now, another thing to keep in mind is when I'm trading, honestly, I'm looking for maybe one trade per market. So I'm probably looking at 3 markets right now. Probably going to add some more to my list. I'm looking at NASDAQ, US 30, and gold, but I'm probably going to add some more to my list. And honestly, I'm looking for one trade per market, okay? So let's say I get a nice breakout, and I take a trade around here, whatever, or I take a trade around here, and it's a nice winner, okay? I'm not going to look to trade again, because, you know, you know, if I decide to trade again right here, you know, the market might chop around. So me personally, I like to take those high quality trades. So that first pullback, that second pullback, that's what I like to do. So I try not to take no more than 2 trades per market. If I do take 2 trades per market, it has to be a very high quality trade. But be honest with you, I'm probably taking 1 trade per market. So let's say I'll take a trade on US 30, I'll take a trade on gold, or I'll take a trade on NAS. You know, so that probably would give me a total of 3 trades for that day. Or sometimes I don't see a good setup on gold, so I'll probably just trade you know, NASDAQ or US 30. Or sometimes I only just see one good setup, so I just only trade the NASDAQ, whatever the case is, right? Or only trade gold. So keep that in mind. I'm not really trying to go in and out and trade like a madman. If that's something that you do and you're successful at it, then go ahead. I'm not telling you not to do it. I'm just telling you what I do. I like to, you know, trade like a lion. I like to hunt and basically look to attack when I see a high quality setup. That's how I like to trade. Alright, so the next video we are going to go over different setups you guys can use when you are trading the breakouts and we are trading horizontal lines. I do have more setups in the course later on, but we're going to just talk about these quick setups real quick, and then we're going to go from there, right? So let's go.